Well, good morning, everyone, and welcome to our Monday morning trading session. The markets would have just opened up and a little bit of a soft open for a Monday morning. Sometimes on Mondays we see things get a little bit excitable out of the opening bell, but not yet. For those of you new to the room this morning, welcome. What you're looking at is the diversified trading system, and the way I have mine set up, I have my Hawk Scalper here in the top left corner, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. The markets I'm watching on this particular monitor are the NASDAQ. I'm also watching soybeans and crude oil on my other monitor. But if there's something that you would be interested in seeing, please let me know. I can certainly pull it up for you. All right, so at the moment, let's take a look at where we've been in the overnight. Why don't we start here with the Falcon. A little unusual opening gap. Well, I suppose it wasn't really an opening gap because this was in the Sunday morning session, which I'm not currently plotting, so it looks like a little bit of a gap. But not too much activity, really. A little bit of a run-up in the wee hours. Now we're working on a possible trend change signal. So not much to report just yet. Throw a little trend line across the bottom here. Just a reminder also, this week I need to cut the room session a little bit short. We're only going to be meeting for an hour in the morning. I'm helping a friend down in Victoria, and I've got to get a bit of an early start. With the drive and all. All right, let's take a look here at crude oil. We might not get anything tradable unless things shake up here a little bit. Here's crude oil, and you can see very, very sideways looking. This is again on the Falcon Swing Trader. Notice the trend line, back and forth and back and forth. Our filter, very, very choppy. This is telling us that this market is pretty much range bound. We get the same look here in the Hawk. This is the crude oil Hawk. We're getting a red bar buy signal here that seemed to have some follow through to it. But it looks like unless we can emerge from at least this trading range through here, it might not be worth trying to do anything with it. Well, you know, sometimes that's part of the game too, is you just have to wait a little bit. Okay, we're getting a first micro macro cross signal here on the NQ. Come back just a minute there. We'll see if we get a little bit of a bounce off of this trend line. And see, even here on the hawk, before we get the full reversal, it would be nice to see a test of the extreme before we get the reversal. Okay, it was a little late getting to that one, but it does look like it's having some follow through to it. Ay, 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 what a mess. Okay, soybeans possibly giving us a trend change signal. Bring that over here for a moment. So here's the falcon on the soybean market. You can see also a lot of sideways congestion going on, but we are working on a trend change signal to the upside. Here's our up portion. Our trend line changes color. Here's the down portion, and now we're working on another up. It hasn't printed the signal just yet. We're still getting the warning dots. Oh, it's getting warmer. So not quite sure yet whether there's going to be enough in here to see. We're going to be right at that little swing high when it prints, so I might go a tick above. Can I cover it below? Yeah, I can. Not a bad looking trade, but this swing high here is going to be a little bit problematic. Again, because the market is in a little bit of a sideways range, and I think I'm going to go back with the swing high low, leave my stop a little deeper to where it was originally. And, well, we'll see. We'll see whether soybeans can press this market a little bit higher. All right, we'll put that on the shelf. Ah, yeah. Thanks, Jim. This has been a problem of late with the markets, with the stock indices anyways, where the NASDAQ is at odds with the stock market. Normally they tend to move in a loose correlation, but not lately. Jim says the YM and the NQ are not moving together again, but are advanced decline. He says there's more buying going on. There's about 1,000. The advanced decline is about 1,000 to the good, to the positive. So at least on the floor at the New York Stock Exchange, there are more buyers than sellers. All right, the NQ working on a 4-arrow consolidation here. So we have 1, 2, 3 arrows. We'll see whether we get that fourth signal. And we're getting a trend change signal here also. This is one of these trades where there's not a whole lot of structure to it. DTS is telling me there is a tradable signal here, but it's one that I'm going to dial down the risk on. And I'm going to wait for a second push on this entry also, just out of curiosity. What would it cost me if I covered it like this? I can't afford it. What if I did this? All right, I'm going to wait for that second push on this entry. Normally, we have some sort of structure to this trade. You know, there's a very small test of the extreme here, right there. And we could see it continue lower because of that test, but it's not much of a test. And, you know, it's still early. I think sorry about that, lost audio for a second. So what I was saying was it doesn't look like, oh, yeah, I'm filled. Okay. There's not a lot of structure there, so it's a little bit of a hit and hope type trade. So the only way I can protect myself is to dial down the risk amount. DTS did give me the signal. I waited for the second push on the entry to try to get myself on, keep myself on the right side of this trade. And I may actually hold stops for just a moment in case there's another little swing through here. I would expect something to be going on down here around 43.90. So we'll see what happens as we get a little bit closer to that. Yeah, there we go with a little bit of a hiccup. All right, so this is where the buyers are trying to dig in off of this 43.90 low. We should get one more swing in here, and then I'm going to become a lot more aggressive with my stops. In fact, I can get that ready. If we break 43.90, then we're almost assured a move lower. Here's something I don't point out very often on the Falcon. You see how we almost had a late filter entry signal here, all except this trend line going out of sync for a single bar? That's because this bar right here went one tick too high. So because of that, if I see that the trend line is out of sync for only a single bar, maybe even two, and I still get this late filter entry signal where the filter goes out of sync, comes back into sync, I will ignore the fact that it went out of sync for a bar or two. Not more than that, because more than that you start to get, let's see if I can show you something. It's going to start looking like this, right, where it gets all over the place, has no follow through. Part of the reliability of a late filter entry signal is the fact that the trend line does not change color. But like I said, this one went out of sync just because this bar here went one tick too high. Okay, the buyer's starting to make a stand. And now I'm looking for the sellers. Looks like there's a little bit, if I drew a trend line across here, you can see that we probably have some sellers selling right on that trend line. So if this bar finishes low, I'm going to go with my more aggressive bar high-low strategy. It might prove to be too early. It might prove that maybe I should stay with the ATR, stay back here on the hard edge of the band. It looks like risk-wise it wouldn't be bad to go with the ATR. I would have, well, $130 in open profit. Okay, so I'm going to go now with the bar high-low, or not open profit, risk. So taking a little bit more risk out of the trade and really pressing the sellers now. Come on, don't stop me. Get down there. Jim says the bank index and the DAX are both looking a little bit weaker. All right, well, let's see if the sellers can pull it out of the bag there or not. Come on, get down there. I knew that 43.90 area was going to be problematic because, of course, it's the low from, oh, why does this look different? It's the low from over here. There we go. Okay, so it looks like we took a little bit of a rally here, got tagged for $65, which is unfortunate, but it's not the end of the world. Now what I'm going to do is I'm going to make a note to see whether the ATR stop was the better strategy here. Okay, we're experiencing a little bit of a pullback in the NQ. Okay, so you see how I did this here. So in hindsight, it would have been safe to sell at the hash mark, but I didn't know that at the time. So I was using the ATR line here and this low as a little bit of a filter, and I was waiting for a second push on the entry, which we got, I believe it was off of this bar right here. I covered the trade initially near the highs. The market came down, showing me a little bit of a reaction here to the 43.90 area, but I don't necessarily want to start getting too edgy with my stops, right? It's not unusual to expect some sort of reaction here. It's obvious support. We're not going to be the only ones who notice it. So I wait for the reaction, and I wait for the sellers to show me where they're interested in selling again. And once I see that the sellers are going to try to recover this market, well, then it's time to bring the stops in. So I brought the stops in just above here, and then we got stopped out. Now notice what happens when the sellers lose control is we put in a little bit of a rally. And now we would be, if we even held our stops back that up here above the initial swing, we would be sweating that trade also. Most times, once you get the market showing you that second swing, you can expect some sort of commitment. So let's say we did this green bar sell, which once again we know to be a fairly reliable signal on our eagle, but we're looking at this and we're thinking, oh, well, there's lows here. We're against the ATR filter. Maybe I should wait. All right, so let's see if we get a second push on the entry. All right, we're going to pretend here for a moment because it's not obvious from any of these bars where the second push might have come from. But let's pretend that we're going to use the ATR as a filter. So we're in our trade. We're expecting some sort of reaction down here. Okay, so here's the obvious swing that the buyers have bought the market up in reaction to this low here. Now the sellers are stepping in. This would be the place that you're going to start rolling your stops to. So in this instance, by now you could at least have your stop above the high of this bar, maybe even at break even, especially since this bar closed low. Now I would definitely be at break even. And now I would have been stopped at break even. Oh, shoot. That didn't go quite as anticipated. I thought we were getting the full reversal earlier. Oh, well. Okay, so I was a little quick with my stop. But you know what? Sometimes it's even better just to take your lumps early. Even if it does mean a break-even trade. See here, this one would have been disappointing though. We sold here, covered here. Oops, no, sorry, we didn't. We sold here, covered here. Anyways, the point is we would have been stopped regardless. All right, so that goes back on the shelf for now. And yes, I know it's a problem. You know, trade management, there's really only two schools of thought for trade management. You're either going to be aggressive on the trade management, or you're going to be very liberal with your trade management. You're either going to run your stops tight and be prepared to get stopped out early, or you're going to leave your stops alone and try to ride out the swings in anticipation of getting to your profit objective. There is no right way. They all work sometimes. They all fail sometimes. If you're looking for that one thing that you can apply across the board, you're not going to find it. Sometimes you just need to gauge the market conditions. You know, like I'm looking at this even from where we opened it. Remember I said we're getting the signal here. It doesn't have the best structure to it. I don't feel really good about taking this trade, so what do? I dial down the risk amount. I run a tighter stop. And this time it worked out better for me than if I had run a looser stop. But if I'm looking at a chart like this, you know, where we've got a rather substantial move, it looks like there's a trend in place, and I'm generating signals. Well, maybe this one is a trade where, you know, there's obvious market momentum. Maybe I'll feel a little better about running a higher risk amount or holding my stop back a little bit and let the market sort itself out if it needs to before, you know, heading lower and finding my profit objective. All right, so we've got the NQ with the first micro-macro cross signal. And we have an opportunity here for a second push on this entry also. Looks like it's bouncing off the underside of this trend line, which is always kind of interesting to see where the buyers and sellers step in. Now this seems to be working itself into a macro pullback signal. And it's the same kind of deal here where things aren't looking overly inviting. You know, we had a downtrend here, right? Now all of a sudden we're printing buy signals. Obvious resistance right about there, but it is a first micro-macro cross signal. So let's see, what is this going to cost me? Okay, that's a little rich for me given the market conditions. How about we do a little bit of a dial down here? And I take it above there, over there. Okay, that I can live with. And you can see how deep I'm covering this trade because if I get filled here, okay, I got filled here, there's still a possibility that the sellers are going to step up somewhere around here. Until we get above this high, you know, it's a little bit of a problematic trade. So this whole 4407 area. Okay, so you see the sellers showing a little bit of interest early in selling. We're going to get up here to 4407. Then we're going to see the sellers try to knock it down, and then we're going to see the buyers come back, and that will be my cue to perhaps get a little more aggressive with my stop. And I do like the bar high low for that type of scenario. Come on, get up there. I think we did hit our first profit target, which would have been right here at this high. Come on. Come on, buyers. There you go. Come on. Now, if this bar finishes up here, there we go. Now I'm going to go with the bar high-low strategy. And we have hit our first high probability profit target. So, you know, a lot of times we'll see the market tag that high probability target. There it is right there. And then reverse. But if we get above 44.07, we're going to get a little bit of room here. There we go. Oh, look at that. See how active this bar is becoming? That's the sellers getting trapped out of their trades. They're getting forced to exit their positions. Oh, they're coming in a little heavier than I anticipated. There they go. Come on. So almost $100 open profit. There we go. They just flashed 100, 110. If we get 150, I'm going to punch out. That would be 3 times our regular profit objective, which would be substantial. Nope, not going to get it. They're going to tag me here in a moment. All right, well, we still settled at the same place. It was better than a kick in the head with a frozen boot, as they say. And we took steps to try to protect ourselves. Now, once again, I'll make a note here because I'm always comparing stop strategies. People always ask, how do you know which stop strategy to use? We have 16. How do you know which one's best? Well, this is how you know. You make notes. Okay, bar high low gave me $50 profit. Had I stayed with the ATR strategy, would it hold me in longer? This is how you find out these things. Jim's long the Raptor at 44.07. All right, Jim, we're pulling for you. So Jim's long right here on that Raptor signal. And that would be our first trend change signal, which tends to be the most reliable signal. With the Raptor, you want to pay attention when your signals fire, because that first signal that prints is probably going to be your strongest one. Oops. All right, so the band just flipped over. There's that first signal. The band flips over. Here's that first signal. Oh, nice. Jim bagged 10 ticks on that trade. Well done, Jim. You know what, you guys? Anytime you're printing a number in the black, give yourself a pat on the back. Crude oil made a little bit of a spike to the upside. Now they're recovering somewhat. We might get another opportunity there. Okay, so you see here on our Hawk trade now, another situation where the tighter stop or having gone all in, all out would have proved to be a little bit better than running a looser stop strategy today. See if I'd run a 3 period. Okay, 3 period, I'd still be holding on to the trade. Getting a little bit of a double dot signal here on the Falcon. This is, of course, our counter trend signal. Nice thing about the counter trend signal is that you can cover it above an obvious swing. Oops, darn it. I was just about to place that order. That's what I get for explaining stuff. Okay, so there's our counter trend signal. Now, if this trade turns over, we should get a trend change signal through here. So not to panic, but you see I don't pay much attention to the counter trend signals very often. I'll just use them as an early warning. But if I can tie them in with a swing, in this case a swing high, and I can say, okay, well, last time the market was here, this is what happened. Now the market's in this neighborhood again. Yes, not exactly, but close enough that it's reacting. What can I anticipate? Well, I can probably anticipate at least a test of the extreme, right? We had a little bit of a run up here. Before this market can reverse and head higher, I need to see a test of the extreme. So that's the double dot combined with the reactionary high combined with the need for a test of the extreme made this seem like a fairly decent counter trend opportunity. Unfortunately, or perhaps fortunately for me, remains to be seen, I was a little bit late hitting my submit button. Oh, stop it. Okay, so we'll just see how this trade plays out. And this is the type of trade where you would have to hold above this swing high. You'd have to hold your stops here because we might see a trend change signal. And what do we expect in a trend change signal? Well, we have the portion that changes the trend line. Then we have, in this case, the buyers coming back, an up portion, so we don't want our stops too tight. And then we come back with a sell signal, probably somewhere down here, around 44.02. But it is counter trend. I don't normally go out of my way for counter trend signals. The NQ a little more sideways than I anticipated this morning. I thought for sure we were going to see a bigger sell-off. Alrighty, well, we'll see how things settle out here. I've got a few minutes left before I'm sorry I need to go. But everybody's just kind of going flat here at the moment. What's with that? All right, still trying to get a handle on all this sideways action that we're seeing. You can see more yellow bars starting to crop up. Not so much that I'm thinking this market's hitting the skids just yet, but the lack of follow through, the yellow bars, these are all showing indecisiveness on the part of the market. Okay, so you can see this counter trend trade that we were looking at, that it did in fact work out. The buyers were only able to muster a single bar to the upside, which again suggests a little bit more weakness. So I'm definitely more bearish on the NQ now in light of this failed rally. We're going to see the buyers come back here yet and give us a proper trend change signal. But yeah, it's looking a little messy at the moment. All right, first micro macro cross building. But we don't want to get too aggressive on this sell because we don't have our test of the extreme yet, right? So there's a possibility the market's going to come back here around this 44.02, 43 area and then give us a sell signal, which would be precisely what we would be expecting given the Falcon also. Well, it looks like we might have to wait a few minutes for that to come about, folks. I'm sorry, I need to go. I will see you guys again tomorrow morning. I'm optimistically bearish on the NQ. I think we are going to see it head lower. And I think, well, crude oil might try to put in another rally, and we're still kind of nursing our soybean rally, which we bought earlier this morning. So hopefully that will have a little bit of a move to the upside. Look for a 4-arrow consolidation or a macro pullback to build here. Look for the trend change signal in the Falcon. And I will catch up with you guys again tomorrow morning. We'll talk to you then. Bye for now.